Hello everyone, welcome to BISP Solutions. I'm Tanvi Arora and I'm working here as a functional consultant. So in today's video, we are going to see the case scenario of change in ownership percentage by period. So let's just go to the smart view that I've prepared. Okay. So this is my Excel sheet that explains the case exactly. So North 101 is my holding company and North 102 is my subsidiary company. It has made an investment of 90% in its subsidiary company. So what this case explains is in January, this is for the period of January. In January, the ownership was 90%, which it will withdraw by 20% in February period. So whatever changes will happen, we'll see the impact on everything. So first of all, I'll explain the January situation. So I've already prepared this balance sheet and I have a few assets here, the fixed assets I can see. And then I have current assets and this is the common stock of both holding and subsidiary. And North 101 has made an investment of 2 lakhs in the subsidiary basically. So which I will tell you here, it has made 2 lakhs of investment. So basically, we have to calculate these figures. Now, on consolidation, what happens? The investment that has been made will become zero. So whatever investment has been made by the holding company into the subsidiary, the impact of consolidation is it will get eliminated. So as you can see, this 2 lakh will get eliminated at the consolidated level, and all the fixed assets and current assets will sum up for the holding and the subsidiary company. Okay, so I will just tell you the impact. And three things we have to separately calculate: the goodwill figure, okay, and then the retained earning, and then the minority interest. So I'll explain the calculation as well. Now, what is how the goodwill calculation is made? It is basically the investment made into the subsidiary company, which you can just I have linked this sheet, so which you can see that it is 2 lakhs, and then net assets of my subsidiary. So net assets of my subsidiary is the common stock of my subsidiary, which I've already linked. Okay, so what is my common stock of subsidiary? It is 3 lakhs and it has made 90% of investment. So 90% of investment is of 3 lakhs is 2 lakh 70, and then my goodwill comes to 7 minus 70,000, which we will verify after running the business rule of consolidation as well from the January output sheet. So this figure should match. Then retained earnings. Retained earnings calculation is the retained earnings of my holding company, that is 20,000. After like consolidation, these retained earnings of holding and the subsidiary share will get combined basically. So 20,000 I have taken from here, retained earnings, and then retained earnings of subsidiary is 40,000, in which the holding has 90% of share, which comes to 36,000, and the total of it is 56,000, which we will tally it from the output sheet again. Then comes the calculation of minority interest. So basically, whatever part left for in the share capital of subsidiary and the retained earnings of subsidiary is the goes to basically NCI. So this is also called NCI calculation. That is non-controlling interest. So share capital of subsidiary, basically this is 3 lakhs, and then the remaining 10% is of the minority people. Similarly, in the retained earnings as well, they have 10% of share. So we will verify all these figures later when we'll run the business rule of consolidation and how the consolidation will take place. And you can see that debtors will be equal to 1,50,000. We'll verify all these figures. Okay. So let's just go to our input sheet first. So this is my input sheet for January. I've already defined all my POVs and I have input the figures as well, as you can see, and my balance sheet is tallied here. And the investment in subsidiary is 2 lakhs. Now the next step is to go to the application to define the ownership structure and run the business rule of consolidation. So let's just go to our application. Okay, this is my application. So from this application tab or card, we'll go to consolidation. And from here, first of all, I will check for my correct POV. Okay. So scenario is plan, year is 2015, and this will be January. So we are doing it for January 1st. And now I will just click on this arrow to save it. Then I'll just change the ownership structure. Yes. So my entity is not 101 and 102. Now this is my holding and which is defined correctly, and it has 90% ownership. So I've already defined for ease purpose. Okay. So this North 101 is 90% and this is our subsidiary. So, and you can see that 10% the application automatically calculated for the NCI. Okay. Non-controlling interest. This is minority interest percentage. Now I have to just save it. And then I have to recompute my ownership data. So from the actions, I'll go to recompute ownership data and I'll check for my POV once again. Scenario is planned, everything is fine. I'll just recompute this. Okay, so once this is done, and then I will see the status in the data card. So I'll just go from the navigator from the dashboards. I'll go to data. And here I will select my data status. So data status form is here. Again, I will check for my POV. It is fine. So we'll see the impact basically. So here is our entity, and for the period of January, the result is directly showing okay here, which should it should have shown as impacted, but there is some application error in this. So this okay status comes when we run the business rule of consolidation, but still we'll check the results in the output sheet. So it should be impacted, and once it is impacted, from actions we have to run the business rule of consolidation. So I'll go to business rules and then consolidate. Okay, so my entity is correct. Then period, I will select as January. Scenario is plan and financial is also correct. I'll launch this rule. So once this has been launched, actually the status should show to okay, which is already showing here. So let's just verify the rules in our Excel sheet, whether it is giving us the correct output or not. I'll go to my output sheet. So, wait. Yeah, this is my output sheet and it has already calculated everything. It means that it has run the business rule of consolidation, but due to some technical errors, it could not show in the application. So let's just see the results. So our goodwill is coming to minus 70,000. First, we'll highlight all these things. Common stock is 5 lakh. Minority interest is 34,000. And then retained earnings calculation we will see. Okay. And you can see that this investment in subsidiary got eliminated. So this thing I have taken at the elimination level, and we can see that this 2 lakh got eliminated, which becomes zero. And then whatever investment was not investment, whatever was the share capital of subsidiary. Okay. So common stock, if you see, 3 lakhs was of subsidiary and it got eliminated at the elimination level. Only the common stock of the holding comes. So this is 5 lakhs. We can see this in our Excel sheet also, that common stock of holding, only holding will be considered. Okay. And all these figures are getting verified. Our goodwill was minus 70,000, which we exactly got in our output sheet. Okay. Then our common stock 5 lakh only for the holding. Minority interest is 34,000, which is coming actually correct as per our calculations that we have made. And then the retained earnings, these are 56,000. Okay. So let's just check which is coming right. Okay. So what will happen after consolidation? The assets and the liabilities of the holding and the subsidiary will also get combined. So we can verify 2, 3 figures. Like my machine, the total at the consolidated level is 3 lakhs, which I can verify from my output sheet. So machine, at the consolidated level, this is at the top level. Okay, so I've already defined everything, like all the POVs, we take it at top level here. And this is entity wise. Okay, and this is at elimination level. So we have verified all the things. Now the case is in February. Okay, North 101 has withdrawn the ownership by 20%, and now the holding has become or has less down to 70%. Okay, so everything is same here. We can see that. Okay, now what happened is in our February, some transactions happened. Yeah. So in February month, some transactions happened, and like in the bank, some transactions have happened, and also the income has been increased by 30,000 in North 101 and 20,000 by in North 102. And also, if it is withdrawing the 20% investment, so investment we are just taking like minus 20,000, any random number here. So it has reduced the investment by 20,000. Now, considering this scenario, we will see the output in our Excel sheet. What will happen to what changes will happen, or what impact it will create on our goodwill, retained earnings, and minority interest calculation. So this is my again prepared balance sheet. Now there is no change in machinery. This is fine. Now, as you can see, the investment from 2 lakh, it has reduced by minus 20,000. Then it has become 1,80,000. Okay. Goodwill, from where we have calculated this figure and from where it is coming, we will verify from the output sheet again. Then debtors, there is no change in debtors, but there is change in bank. So earlier it was 1 lakh, we have increased by 50,000. We have increased it by 50,000, and also for North 102 we have increased it by 20,000. Okay. Then common stock was 5 lakh, 3 lakhs. There is no change. Retained earnings will also be increased because we are increasing the income by 30 and 20,000 respectively. And these figures will be calculated then and will be linked. Okay. Also, investment will become zero after the consolidation. So this is the changed scenario basically. Now, from where we will calculate all these things, I'm just going to explain you the calculation first, and then we'll see the result, whether these are tallying with our output sheet. So basically, we are going to consider for the goodwill calculation, the change in investment. So earlier, the investment was 2 lakh. Now it has less down to 1,80,000. So the change is minus 20,000. Just a second. And then we will consider the change in net assets of a subsidiary. So we will not take normal net assets. We'll consider the change. So how we will consider? this time we will take the common stock plus retained earnings. Okay, so common stock and retained earnings, which will be total as 3 lakhs is the common stock of subsidiary, and retained earnings earlier, if you see, or you can see the January Excel sheet also, they were 40,000. Okay, 30,000 and 40,000, which totals up to, or which sums up to 3 lakh 40,000. So 3 lakh 40,000, and the change is 20% because the ownership has decreased with 20% or by 20%. So 3 lakh 20% of 3 lakh 40,000, which comes to 68,000, and this is the goodwill. Okay, 48,000, but this is considering the changes. Now whatever the goodwill was there for the January period, we have to consider that also. So we got goodwill of minus 70,000 for the January period, and we have to take the net effect here. So the net effect is minus 22,000, which we will see after running the business rule of consolidation whether we are tallying this or not. Then retained earnings calculation is retained earnings of the holding company. Retained earning of the holding company are 50,000. Okay, from here we can see. And then retained earnings of subsidiary, we have prepared a note for this. So what was the retained earning of subsidiary earlier? So it was 40,000. Okay, it was 40,000, and this is opening. So 90% investment was there. You can see from here 40,000 retained earnings was there, and 90% of it comes to 36,000. And then what is the additional retained earnings? And now the retained earnings are 60,000. So whatever change is there, okay, 60,000 minus 40,000, that is 20,000. And then we'll take the actual percentage because the investment has become 70% now, the current investment. So this will come to 14,000, and then the adjusted retained earnings will be 50,000, which we will take the retained earnings as of subsidiary. Okay, so the total retained earnings will be 1 lakh, and you can see that 1 lakh retained earnings from here. For minority interest, this is easy. A share capital of subsidiary. Now see, whatever portion, like 70% is the current investment, so whatever portion is left, that is for the NCI, non-controlling interest basically. Okay, so this is the share of them in the share capital, basically common stock, and the share of them in the retained earnings, which comes to 1 lakh 8,000 here. Okay, and then after consolidation, we know that investment will become zero, and all the assets will merge, all the liabilities will merge. Okay, and these calculations whatever we have done, we'll see in the output sheet once we run the business rule of consolidation. So let's just go to our application. Again from application, and then consolidation. Our POV is correct. Let me just confirm this plan, and period is February now because this is in the next month. Okay, scenario plan. We'll run this, and then we'll see, find for our entity, that is north, not 101 102. Now see, I've already defined this. This is 100%, this is holding, and this is now the investment has come down to 70%. So it will automatically calculate the 30% for the minority people. Let's just save this. So status has been saved, and from here we have to recompute the ownership data. This is for the February period, and which is fine. Okay. Then we'll go to data. From here, the data status. Okay, let's see for February period. So I'm just saying that it has already calculated as okay, but it should be impacted here. Okay, it should be impacted here once the business rule of consolidation has been run. So then it will change to okay, but it's fine. We can verify the result from the application. So from action, I'm going to run the business rule and launch it. Consolidate. My entity is correct. Period I have to change. Scenario and year is fine. I'll just launch this. So once this has been done, actually now the status change should have been changed to okay, but it is already showing. So it's fine. We'll verify it from our Excel sheet. Let me refresh it. Okay. So see, I have already inputted everything here. And yes, this was my input sheet for February. And I've already shown that these were the transactions that happened. And this is my input sheet for output sheet for February. Okay. So let's just verify quickly. This is my goodwill, my common stock, minority interest, then retained earnings, then investment. So basically, we have already verified these figures. It is coming to minus 22,000, which we can see from our Excel sheet that it is coming. The net effect is minus 22,000. Okay. And okay, let's just verify the other figures. 5 lakh is my common stock, which is of holding. We'll only consider after consolidation, the common stock of subsidiary will get eliminated. This is at the elimination level. So you can see that it is getting eliminated. And then minority interest, 1 lakh 8,000, retained earnings, 1 lakh. 1 lakh are retained earnings and minority interest is 1 lakh 8,000. And the investment will become zero. Whatever investment we have done in the subsidiary, whatever investment the holding has done basically. Yeah. So it is getting eliminated. So this is how the impact of change in period, a change in ownership percentage by period will take place. Okay. Thank you so much.